Tonight's Market Monitor says he's cautiously optimistic on the stock market, but still thinks stocks are reasonably attractive. He's Charlie Bobrinskoy, Vice Chairman of Ariel Investments and Portfolio Manager of the Ariel Funds. I'm going to call you Charlie because your last name is a little long for me, but welcome nonetheless.
Thanks for having me.
We heard earlier today, both from Warren Buffett and from Carl Icahn, who said that they thought the stock market, broadly speaking, was fully valued and that they were having a hard time finding things to buy. Do you share that view?
I think the word he used was fairly valued, which is different from fully valued. I mean, I think we would agree with Warren in that sometimes the market is overpriced, sometimes it's clearly underpriced. Right now, it's in the middle. So we would expect to get normal returns on the stock market, maybe high single digits, not spectacular returns, but reasonable returns.
You know, there's been a lot of volatility in the market this week, partly because of the Fed, but you're watching another part of the market, the muni bonds, and you say that there could be trouble brewing there.
Yeah, so while we think that the stock market is fairly valued, and there are no great opportunities, not massive risks, the muni market is where we do see danger. And we think there are things like the state of Illinois, which frankly my home state is broke right now. They have over $100 billion of underfunded pensions. That doesn't even count the city of Chicago and Cook County. And there are going to be big problems in the muni bond world. Puerto Rico, I could keep going on. And I think the investors in that market think that the federal government is going to bail them out because they bailed out GM. But I don't think that's going to happen. I think there's going to be real losses in the muni bond
Let's
market.
get to a couple of your stock picks, two companies that are hardly broke, but maybe a little bit unloved. Let's begin with IBM and Microsoft. Why do you like them both?
Because so many people don't like them. They're very much out of favor and very cheap stocks, trading for about 11 times forward earnings, both of them. In a market that's about 14. People think that Microsoft is going away, and it is not. Microsoft has a wonderful cloud business where they provide services to people as big as Oracle. They try and write an email without using Word. Send a Word document with something other than Word, and the person on the other side won't be able to open it. So they still have a great business, and they have a ton of cash on the balance sheet, almost $72 billion of cash. The other one we love is IBM. IBM is in the middle of big data. Watson, the famous computer that beat Jeopardy, is fabulous at mining data, and IBM is on the cutting edge of that. That stock is also only at about 11, 12 times earnings. They had one bad quarter last quarter, but we think their business is recovering.
Let's move on to Western Union, because you say they're at the forefront of digital money transfer.
Absolutely are. They have the highest margins in the business. People sometimes say, oh, people in the future will be able to transfer money on their iPhone. Well, if you're an immigrant worker from Mexico, the problem in sending money back to Mexico is not that the phone couldn't do it, it's that you don't have the bank account in Chicago or in Dallas to do it. And the limitations on sending money aren't technology, they're regulatory. The U.S. government has very strict controls on sending money across borders, and Western Union is very well set up to handle that. So we believe it's a great company with good growth, trading again at about 11, 12 times earnings.
We're going to have to leave it there, Charlie. We appreciate it. Do you have any disclosures? Do you own? I assume your funds or the company owns those stocks that you mentioned, but maybe you don't.
We own all three, and then I personally own all three. We do no investment banking business with any of them.
Charlie, thank you very much. Charlie Bobrinskoy of Ariel Investments, Portfolio Manager of the Ariel Focus Fund, which is up something like 30%, Sue, thus far this year.